Here, welcome to this session where we're going to be doing markets of your choice. Okay, but first, before we do that, let me give you our caveat, which we always do. Just to remind you that there's always a risk of trading in any market and in any time frame. And so with that short caveat, let's get right to the markets. Let me get up the... Okay, so we'll look first at Nike. And just a reminder that for those who are joining us for the first time here, remember that even if you don't trade these markets, any analysis we do could be applicable in all markets and in all time frames. So, take this also as an educational session, in addition to, if you happen to be following these markets, as a way to think about what to do with the market of your choice. So let's look at the action over here. All right, so first of all, this is a classic bullish engulfing pattern where, look at this, the green candle wraps around 1, 2 red real bodies. And so what that means is that the likelihood of that becoming a support area is greatly enhanced. Okay, we could have a bullish engulfing pattern with a small green candle wrapping around a small red real body, and that it doesn't really show us a real change in the bulls taking over from the bears as this does. And not surprisingly, look what unfolded here. It became a support area, long lower shadow candle. Not sure if this is a hammer. A hammer should be twice the height of the real body, but nonetheless, a very long lower shadow. And more importantly, it confirmed a support level. So we had two reasons: the bullish engulfing pattern, and a few sessions later, the fact that it confirmed a support area for reasons getting a little bit more confident that the market was trying to build a base. Now, these lines here one's a short-term moving average, is a 20-day moving average, and there's a 50-day moving average, both simple. That I use this for a longer term perspective on the market. So we can see the long-term trend is down. The short-term trend is also down. You can see over the last couple of sessions, the market made a bear channel. So with the aforementioned, I'm looking for potential support. Okay, at the lows of this classic bullish engulfing pattern, which was confirmed here. So although the short-term trend is down, I'm viewing, the market is approaching a potential support area. Okay, again, and this is Nike. And as to resistance, this is right over here. This is a little bearish scenario. First of all, we have a falling window. When I say we, I mean the market has a falling window over here. Becomes resistance. The market got above but didn't close above it. And notice all the resistance over here, right? The market poked its head above resistance. Now, when the market, stock or whatever security, again, it doesn't matter what market and what time frame you're looking at. We have students in over 85 countries, and they don't trade only U.S. markets, believe me. So this holds true in any market, any time frame. This happens to be a daily chart, but this could be true for an intraday or a weekly chart. So once the market pokes its head above resistance, it's really up to the bulls to take control of the market. And by failing to do that, in other words, by failing to hold above the resistance area, that becomes short-term bearish. And the target is called a falling off the roof, because the Japanese say, let them climb the roof, or let them climb the roof, and then take away the ladder. It's really a false breakout. The target is the most recent low, which is now approaching. So essentially, the market's in a box range, and that's how I'd be trading it, with resistance at the falling window and support at the bullish engulfing pattern. And by the way, in a little bit, we're going to be looking at some major markets. We're going to be looking at the S&P. We're going to be looking at Bitcoin, Ethereum, and so forth. Okay, let's look at another request. We're going to look at Microsoft. Okay, here again, the long-term trend is down. Okay, short-term down, but a little bit more neutral. What's nice about the candles is beside giving you early reversal signals, like over here, the shooting star, a bear hotter me, notice that became resistance over here, a little bearish engulfing pattern. So candles, when properly used, and that's what our education is all about. And by the way, in a little bit, Paul will talk about a really great educational resource with a huge discount, because that's what the focus of our mission is, to make sure you use candles correctly. So anyway, here I started to say what's nice about the candles. One, they give you early reversals, but they give you the ability to use all classic Western technical tools. So notice the horizontal support here, and that's what I have as first support, and the falling resistance line right over here. I'll make a trend line here. Okay, this is called in Western technicals a descending triangle. So although the market's holding support, it's actually short-term bearish because the market's making lower highs. Now, if the stock, if Microsoft closes under 300, two things should happen. The 300, the old support, should become resistance. If that does indeed turn out to be the case, what's nice about the descending triangle that is used in Western technicals, we then have a price target. We take the height of the triangle, $15, and subtract it from the $300 level to get a target of $285. Okay, so here showing you the power of using candles in addition to classic Western signals. Okay, and as to resistance, so I think the market is really trying to build a base here, holding support. And resistance, we could see right over here, the zone over the last couple of weeks, right around the 315 area. So here again, essentially over the last week or so, is a market in another box range. Okay, let's look at Apple. Long-term trend is down, the 20s under the 50-day moving average. Short-term, I'm going to have as neutral. And interestingly, again, purely coincidental, is another market in a box range. Okay, and there's the box range. Okay, from 176 to around 171. Interesting for the last week or so. So the way I'd be looking at this, we have short-term support, short-term resistance. Actually, let me make a little zone over here. Okay, resistance, support. On a close above the highs over here, okay, which is around 176, give or take, the next resistance would be this dark cloud cover. And again, the power of the candles giving us where the market is running into steam. Dark cloud cover, right at the same resistance area. And so when we talk about in our education candle signals to sell, it doesn't mean necessarily a short, although they're great for shorting in options or forex, but it could mean a time to take some profits, to lock in potential gains. So this is a signal here to think about lightening up on longs, certainly with it becoming resistance over here and certainly over here. You didn't have to be hit over the head with this to show that the market was in trouble. Here we have a classic hammer showing us potentially the market was going to turn. And this hammer is actually a little bit more important because it's confirming a support area. When we have a candle signal confirming a support area, and to me, the most important support is prior resistance and highs and lows. You may be looking at moving averages or whatever, but I like highs and lows. So here we have a hammer confirming a support area. So anyway, resistance area 1, resistance area 2. If the market closes under the 171 level, okay, we can use the height of the box range, the $5 to get a target to the downside. And my next potential support, using the change of polarity, how old resistance. See, resistance becomes support. It works really well right over here. And these are things we do each day. We have a recap. I'll show you what it looks like here. And we go over, at a minimum, these markets right over here. Okay. We don't always do Ethereum or the Aussie, but these are markets we do every day. Again, Paul will tell you how you'll be able to get access to this on a daily basis. But One of the things I look at when we do what we call the daily recap is this change of polarity because it works so well. So you can see this old resistance. Once the market got above it, look what became support. So support level 1 and support level 2. Okay, let's move on. Okay, we will look at Tesla. And by the way, what I'm doing now is we do twice a week with our strategy session, where we take your requests. Okay, so we have a long-term trend is down, 20 is under 50. Short-term trend is neutral. Okay, what's been happening in a lot of these markets are box ranges, which shows you that, not surprisingly, there's a lot of uncertainty in the market over the last week or so. So this defines our first resistance, the highs from last week. Here again, we're looking at Tesla. And the lows from last week define first support. Under that, there's a tiny rising window. That may be potential support. Then the lows over here. And as to resistance, support, support. Okay, support, 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 broke under it, resistance. So essentially, the highs from last week, around 9, or actually Monday's highs. Give a level here. Okay, around 950, give or take. And then above that would be towards around a psychological 1,000 level. Okay, let's look at take some of the markets that we look at each session with the recap. So let's look at the Euro US. And then in a few minutes, we'll be looking at some, we'll look at Bitcoin and some cryptos. Okay, long-term trend is up. We can see the 20s above the 50-day moving average. Look how nicely it's hovering over it. Short-term trend, in spite of the recent lateral action, I have the short-term trend is up. And this is actually really, I think it's healthy. This is called a morning doji star. A long red wheel body, a doji, and then a long green candle. You can also view this as a bullish engulfing pattern over here. But considering the extent of the rally, once again, this is a currency, but it doesn't matter. The same theory holds. But one of the nice things about currencies, it's easier to short than it is in forex. So here, for example, you have the bearish engulfing pattern, which becomes resistance. So if you were thinking of selling, it's something you could do. Start locking in profits down here, or maybe even over here with a hammer. But anyway, so considering the extent of the rally, the fact that the market's holding in really well, I think is a real positive. And not surprisingly, the market is stalling right near this resistance area. Okay, right around the 115. And as to next resistance, what I'd be looking at, not too far from there, is this prior support area. Because anybody who bought here is losing money. And if the market rallies up there, they may be thrilled to break even. So it's actually, we can make it a zone, essentially from the highs a couple of days ago to this hammer over here, which the market broke. Once the market broke, and this is actually a nice example of why you should always set a protective stop. Bullish engulfing pattern, it became support. The hammer confirmed at a potentially high probability trade, but candles are not always 100%, and there's always a price that says you're wrong. And if you went long on this hammer because it confirmed support of the bullish engulfing pattern, as soon as it moved, especially closed under the hammer, if you were long, you should be out of the long trades. And by knowing that, look how much it would have saved you rather than trying to stay in and try to fight the new trend, which was down. And as to support, I'm looking at the prior resistance right over here, right around the 113.50 area. Okay, so let me turn it over to Paul just for a couple of minutes. I'm going to pull up a website. Then we're going to look at the S&P, Bitcoin, Ethereum. We'll look at Google and a lot of other exciting markets. So let me turn it over to Paul. Let me just get the page up here, and you're good to go.
Thanks, Steve. I will just take a couple minutes to go over a special offer that we have on our site at mycandlecharts.com. Now realize MyCandleCharts is just one of the members of the family of the CandleChart family of education. MyCandleCharts is designed to provide daily ongoing guidance in all markets. We have students in 85 countries. We have traders, investors, people from all 7 continents, people that are day traders, people that are swing traders. We have hedge fund managers who are members. We have brand new members that have never made a trade before. So what do we do inside of MyCandleCharts? It is a huge abundance of various types of sessions. Each day, like Steve was saying, we do a daily market recap, similar to what Steve was doing today, where our team would go over the major markets, make sure you understand what's going on objectively. Why do I say objectively? You need to remove emotion out of the trading. How much better could it be than having Steve Nissen and our team letting you know where to be looking for support, resistance, potential entry and exit points. We do a video chart of the day every day, Monday through Friday. It's an educational piece designed to take just a couple of minutes of your time, teach you something. Okay, it's going to teach you something about the markets. It might not be specifically about your market that you trade or your instrument or anything else, but it's education that could be applied to any other market. Each morning, Monday through Friday, we do a morning trade setup. That is a trade that we're either doing or potentially doing that day with reasons for entry, reasons for exits, and as well as protective stops and everything else. So that's done every day, Monday through Friday, through a video. We have a traders network. Think about it kind of like a Facebook for our students, where they can kind of ask questions, post comments, things like that, post charts and ask questions. Forex Focus for our Forex traders. Every Tuesday we do a Forex specific session where we go over all of the Forex pairs in depth. Everything that we do live, by the way, recorded. Again, we know we have students around the globe that they cannot attend live. So the Forex Focus is done every Tuesday. For our option traders, we go through option strategies through various markets every Wednesday. This is done live. Again, we record it, post the recording so that you can go back in and ask questions later. Special topic trainings. If you go to our full library, we have, I believe, about 20 or 22 special topics. They're not going to be on this page, but they're about an hour long each. With a monthly membership, you'll get access to the most recent one. With our annual and or lifetime plans, you'll get access to all 22. Now, reason why I'm bringing this up, we typically sell those by themselves for about $79. So you could do the math, $79 times, call it 20. Those by themselves will pay for more than a lifetime membership. Each week we post a chart challenge, kind of a fun thing to make sure you understand what's going on with candles. We have a blog for some kind of lighthearted information. We have a casual trader video that's done every Sunday for those people that cannot pay attention during the week. We have a lot of these students, people that have a full-time job or they're students or whatever else. We post a video every Sunday, prepping people for what to be looking out for the coming week. We have a charting widget, kind of where you can kind of play around and take a look at charts. We have a weekly wrap-up, so kind of similar to what we do in the daily market recap, but we do it on a weekly basis, a little bit longer term. And we have plenty of other resources. So the page that we're going to put into the link here will provide you with all of this information. But more importantly, if we scroll back up to the top, and there's a lot more than I didn't go over. Normally, we offer this in a monthly, an annual, and a lifetime plan. Normally, our monthly plan is $149. We are offering this to you until that countdown timer goes to 0. You can pay for your first month for only $99. So you're basically getting the whole first month. So if you started today, today's February 8th, you sign up today, you'll have until March 8th at that $99. During this first month, you would be able to upgrade to either the annual or the lifetime plan, and we would credit you this $99 towards either that annual or that lifetime plan. Why is that important? It's kind of important because if you want to try us out, you're really not sure, you want to see everything that we have to offer, for $99, you're basically going to get 20 morning trade setup videos, 20 daily recaps. You're going to get approximately 8 strategy sessions. You'll have the access to the most recent special topic, forex focus each week, chart challenge each week, options outlook every week, and much more. During that first month, you could upgrade, take that $99 you already paid for that first month, and you could apply it towards either the annual or the lifetime plan of my candle charts. Now, I'm going to just leak a little information to you. There is going to be a President's Day sale later this month. I forget the date, but it's right around President's Day, where we will have special offers on the lifetime plan. So you could pay the $99 for this first month. If you like it, you could apply that $99 towards that special offer that we're going to have on the lifetime plan of my candle charts. Now, this offer of the $99 for the first month expires in 6 days, 6 hours, 38 minutes from right now, from the time I'm doing this live. If you're watching this via the recording, you'll see it on the page and the countdown timer goes down to 0. We chose that amount of time because that actually expires at midnight Eastern time on Valentine's Day. Why is that important? Because our motto inside of my candle charts is never trade alone. We know that trading and investing can be lonely and that it can be very daunting and overwhelming as far as what decisions to make and things like that. My candle charts, we don't want you to trade alone. You have a community of like-minded investors and traders that are doing the same thing. So we're giving you until midnight on Valentine's Day to take advantage of this special offer. Now, I just had somebody make a comment, what kind of Valentine's Day gift is that? Well, if you think about what this can do for your financial future and getting the guidance that Steve and our team provide, it'll be a great Valentine's Day next year when you want to go buy a much bigger gift because you have done very well in the markets. So again, take advantage. I'm going to put the link in here right when I'm done talking. If you're watching this via recording, you're already on the link, and all you have to do is click that yellow button, Get Access Now, and you'd fill out your information to become a brand new monthly member with the ability to upgrade. Now, just got a question as well. What if I don't like it? Well, then you cancel, and you're out $99, but you have the ability to take full advantage of that full month of all the resources that we provide inside of my candle charts. So Steve is going to do a few more markets right now. I'm going to hand it back to you, Steve. I will be in the room to answer any questions. So if you have a question, you can certainly type it in. Or when Steve is done doing his markets, I can certainly jump back into the room and answer any of the questions. So with that, Steve, back over to you.
Great, thanks, Paul. And let me get back to the slide, to the charts. Okay, so as promised, and let me make sure we're doing okay here. Okay, so as promised, let me give you some cryptos. Oops, keep on bringing up the wrong thing. There we go. Okay, so let's look at Bitcoin. Okay, long-term trend is down. Short-term trend is up. And the reason for that is the rising window. In most candle signals are reversals where theoretically or ideally the trend will change. A window is one of the few continuation signals where the market is moving up, it gaps higher. A gap and a window are the same. The Japanese call a gap a window. So this is a rising window, which is potential support. So that is why the short-term trend is up. Here we have a hammer signaling a potential bottom, which indeed unfolded. So while the long-term trend is still down, remember, most Western indicators are lagging indicators. A 20-day moving average, a 50-day moving average takes a lot of time to change the direction on these indicators. With a candle, you're going to get potential reversal session signals in 1, 2, or 3 sessions. Look at this. A doji, an evening star, okay, a hammer right over here. Now, as to resistance, once again, one of my favorite signals, change of polarity, prior support. And by the way, this is a Western signal. Okay, old support becomes resistance. I just named it change of polarity, has a nice ring to it. And so the market is near resistance, no bearish signals. I wouldn't say this bearish, but it's a long upper and lower shadow. It shows a little bit more hesitation in the market. Here we had long green candle where the bulls were completely in charge. Here it's more neutral, but the fact that the market is holding the highs, very impressive. So on a close above today's high, my next target would be the falling window. Look how nicely these candles work. Of course, like I said, they're not 100%, but falling window, potential resistance. Market stalled, market stalled. Right over here. So that would be my secondary resistance area. So first resistance, but the short-term trend is up, no bearish signals yet. Then above here and potential support, the rising window. And then not really based on candle signals, but just the fact that the market had so much support right around 35,000 leads me to say that is the next support area under the rising window. Okay, let's look at Bitcoin. I'm sorry, Ethereum. Okay, very similar. Short-term trend, long-term trend is down, short-term trend is up. And look at this, another hammer. Okay, signaling a low. And here again, if you happen to buy in the hammer, which would still be a high-risk trade because the trend was still down, but if you happen to buy in the hammer, your stop should be under the low of the hammer. Candles are really good at giving you protective stop-out levels. If the market breaks under the hammer, if you're long, you're wrong, like over here. Okay, I would have a support zone right over here and here. Once the market broke under this, if you bought in this hammer, which I wouldn't do, by the way, one of the things you'll learn being a member of MyCC is not only understanding candles correctly, but how to combine candles with Western technicals and risk management. Because yes, there's a classic hammer over here, but think about this from a risk reward. If you buy in the hammer, remember it's not a hammer until the market closes. You're buying it here. Your risk is here. My target would be the recent highs, right? Oops. Okay, right over here. So you're risking this amount to make that amount. That's like a one-to-one risk reward. And that is not a trade I would be taking. Very different maybe when the market pulled back and you bought here. Okay, right over here, because it was being tested here. And my target would be there. That's an okay risk reward. So if you buy, your stop would be under the low of the hammer. So there's a lot of nuances that obviously we don't have time to go into today, but you'll be learning as you progress. One of the nice things about MyCC, it's ongoing education. It just doesn't stop. You know, as long as you're a member, you're going to be getting all these valuable insights day after day, week after week, that you can apply to your trades or investments the very next session. So let's get back to Ethereum. So short-term trend is up. We could see a very nice if you're long, bull channel. And my resistance, the short-term trend is up. A little hesitation here, but here again, the market is still making higher lows and higher highs, so it's still positive. So this classic resistance area, a little dark cloud cover, bearish engulfing pattern confirmed rise resistance, a little under 3,500. And then above that, wouldn't be surprised, see all the support. Okay, right around 36 area. And as to support, I'm going to also There's two levels of support, rising support line over here. Now, as time progresses, that support line is going to get higher and higher, right? And then we get rid of this. And then under that rising support line, okay, obviously the lower the hammer, but if we want to get something a little closer, I would do something like a 50% correction, okay, of this entire move. And let me give you I'll give you Fibonacci. So assuming the market sells off from here, I don't know if it will or not, but if it does, these are some correction levels over here. And I'm a big proponent of 50% corrections. So that'd be about 2,700 as the next support area if the market does move down. And let's look at a couple of other markets. Promise you the S&P. And here again, these are markets we look at every day on this list here. We may not always look at the IYT or the IBB. And I'll do these recaps and strategy sessions, and some Nissan certified trainers will also, Sil and Brian, and they may have other markets they look at during the recap. So what you see here may not be exactly what they do for the recap. So let's look at the S&P. Long-term trend is down. Short-term trend, I'm going to have as neutral. Okay, over the last 4 days or so, you can see the market's pretty much in a box range. So that defines our first resistance and our first support. And then it'll close above here, just a little spike high from last week, right over here, okay, as the next resistance area. And we could see the nice bottom signals we got with the S&P, green candle, a very long lower shadow over here. You can see a long lower shadow here, shadow there, showing that the market is really trying to bounce back from the lower levels that we had a few weeks prior. Okay, and wrapping it up with Amazon. Long-term trend is down, but the short-term trend is up. Island bottom. This is the classic Western signal. The market gaps down and gaps up. So this whole rising window is potential support, and the major support is the bottom of the rising window. So that's all the way down over here. Now, this is not a bullish engulfing pattern. For those who are familiar with why, you'll understand. Remember, a bullish engulfing pattern must come after a downtrend. Is this a downtrend? No, this is a short-term uptrend. So the green candle is healthy. The market does have a shooting star, which defines first resistance, but don't view this as a bullish engulfing pattern. I see this time and time again for the people who get their education elsewhere. They say, oh, Steve says a green wrapping around a red is bullish. I'm going to be buying it only sometimes to see something like this before the market falls. So well, this is positive. There's a new high close for the move. The market is near a resistance area. And even if it breaks above the high of the shooting star over here, we have the change of polarity, support, support, support. Market broke under it. And essentially, this area became resistance within a few dollars. So we could actually view this as a zone between 32.55 and 3,300 as a potential resistance area. And as I mentioned, the support, the whole rising window, beginning support area right here with the key support down at the bottom of the window. So that wraps it up here. I hope you got a little bit of a sample of the type of education you'll be getting. And I want to thank you for joining us. I want to thank Paul for giving you a little bit of background about the great idea, the great special. Essentially, if I do the math correctly, 30% discount on your monthly subscription. And here is that information again. And be sure to go to the Get Access Now for those who are watching the video, or for those who are watching the slide. Paul put in the link right into the chat window. Okay, so Paul, you have anything else, or should we wrap it up?
I can certainly stick around for questions, and for people watching the via recording, they could always email me, paul@candlecharts.com. So you could wrap it up, and then I can stick on and answer questions.
Well, I'll keep it open for any questions.